Hello, good evening. I hope everyone's well. I hope you can hear me okay. I'm just gonna fix the volume here. Here we go. And let's go. I'm gonna start with the S&P tonight. And let's zoom out a lot, go into log scanner and look big picture where we are. Because for me, I'm counting this from the 09 low. I'm counting this as wave 1, wave 2, this was wave 3 up to here, this was wave 4, which is a pretty unusual expanding wedge. And so this is the bottom of wave 4 here. And we still saw this before in the 1970s. This was an expanded wedge. So they do happen, they just don't happen very often. And so this swing that we've just done from the 2020 COVID low, that March-April COVID low, is either wave 5, and we finish wave 5, in which case, we should really put our fib retracements all the way down here and prepare for the world to end in nuclear war. Or I think it's possible that this is just this 5-wave sharp rally that we've had is possibly just wave 1 of wave 5. So, and how it kind of unfolds, let's take it out of log scale. How it unfolds, will tell us quite a lot. So a normal kind of, if this is wave 1 of 5, a normal retrace of that wave would be, 50 or 61%. So that means that if we break this 236 fib here, that means that we could be looking at a pullback to 3,500. If this is not wave 1 complete, and I've counted it wrong, then we're likely to hold this 236 fib, and that would keep us in an uptrend from here. And the first time that we kind of came back to it and tagged it, you can see we've had a pretty nice bounce, but we're underneath our weekly moving averages, we're underneath our daily moving averages. This is pretty much in terms of moving averages and trend trading, a downtrend. Also, I'm not a big fan of head and shoulders patterns where the neckline slopes downwards. This one doesn't slope downwards too badly. When they slope really steeply, I kind of think, well, we're just really riding the trend line down, aren't we? Rather than a breakdown pattern. But in this case, if we were to measure, say, from the head to the neckline and project it from the breakdown, which would be here, that kind of almost takes us to this 50% level as well, doesn't it? Kind of adds weight to it. So yeah, therefore I think if we close onto 41.98 in the S&P, that we are looking at a bigger drop. We'll likely bounce at the 38.2, but that we've got a date at 3,500. Now there is an alternate scenario. So in waves 1 and waves 5 sometimes, and I'm not the greatest Elliott wave counter, I just want to let everybody know that just up front, but sometimes in waves 1 and waves 5 you can have ending diagonals or leading diagonals, and they look like choppy overlapping waves like this, and then they finish. One of the characteristics of them is the deep retraces and the overlapping waves. And if that's the case, so this is our wave 1 that we've just done, the normal retrace of a wave 1 is a 78.6 retrace. That would mean if we were to make this was to become if this shit really hits the fan, and these oil energy price rises put us into a big recession, we could see a pattern like that, because we've got inflation and then recession, and it's going to be very volatile. And if we were to do that, then we wouldn't hold this 50% level. Instead, we would come all the way down, okay, to 2750, 2753, if this is going to unfold as a ending diagonal. So all the way down here, and then we would still rally to new highs, because this is still just wave 1 of our ending wave. So it could feel like the world is ending if we got down here at 2750, but I think it's definitely worth look at that level. So that's really how I'm seeing the S&P at the moment. I think this is important support. The thing is that I got quite excited about this rally off this lows and this 236 fib. I thought maybe this uptrend is not over if we can hold this, but unfortunately, and I thought, yeah, now I'm thinking that it's all just a correction. Now, all just being a correction is fine. What we very often see, though, in corrections is three waves, and I think we've got three waves here, but it may be that we're doing a bigger correction, maybe similar to this one. That very often happens in downtrends, they're equal. And so if we were to do that here, it's possible that we find support here or a little bit lower, and we do one more leg higher, retest, back test that daily 200 moving average before we continue lower again. So I wouldn't be surprised at all if that happens this week and we don't make a new low. There's so much uncertainty. The markets don't like uncertainty. We've still got another week before we have the Fed, and so we could very easily squeeze in another swing higher before the Fed on the 16th, and that actually would line up with the Fed on this next week, wouldn't it? And then we could have that high here would be around the 16th. So I wouldn't be surprised at all if we were to do that and make that pattern. If we and then of course it would still be bearish. These still would be corrective bounces. It would make our right shoulder more in line in terms of time with our left shoulder, and then we would still be looking at 41.98 for support. If that breaks down, it's party over. So do we think that oil rises are going to put us into recession? I think they kind of almost, in history, they almost always have. So yeah, in fact, they always have. So it's a shock, really, to the system. And it is a real shock. And I saw lots of people saying today, well, how come the DAX is doing so much worse than other stock indexes? In Germany, they're gonna have a shortage, not just a price shock, but a real shortage. If Russia stops selling natural gas to Germany, they're in a lot of trouble. So if we look at their 5-way sequence up, we've already broken the 38.2 pullback. We're in a much bigger pullback scenario here, and underneath monthly 50 moving average. This is quite a big deal support that we broke with the gap lower this morning. And we also, very quickly back tested it. It became resistance. This is what I always like to see. If you've broken a support, I always say, if you're down here, take a deep breath, wait for the back test. And this is what happens. Got back to the support level, and now it's being sold. So we've got further to fall in the DAX to 12,117. But again, I wouldn't rule it out. If everything else rallies, it might do this. This for me looks like one swing. And so remember, corrections are normally three waves. So most of these stock indexes look like hell for this reason. Let's go back to let's look at the Nasdaq, which is most correlated with Bitcoin. Now, if I go to the monthly, we're looking at a different swing. So rather than in on the retraces, the level that we pull back to in the Nasdaq was not from the 2020 post-COVID low, which is here, but from the all-time lows back from October 2002 after the big fall. This was the 236 fib support that we held, 12,998. That's a really big deal, especially the way we bounced off it. If we break 12,998 on a retest, we're looking at 10,667, which would be back to this low and this 5, which would make a lot of sense. It would also be back to the kind of monthly 50 moving average, and so quite a big deal level. Let's see what happens on a retest at 13,000. So 13,000 for the Nasdaq is a really, really big deal. I had expected, like the S&P, if I go back to the daily, to be honest, I thought that we might get I still think we could get a bigger bounce here, and perhaps rally to the 16th as well, and the Fed next week, and then let's see. But yeah, it's all looking pretty rough at the moment. And again, I got really excited by this bounce. It was fierce, and it was off such a good level. I was looking for this to be 5 waves and a really nice, take us somewhere, and it just hasn't happened, unfortunately. So we are setting up a retest of the lows in these stock indexes, and we'll see what happens from there. Some indexes are quite interesting, on interesting support, and the FTSE, particularly for me, is on interesting support. So if I connect this, let's look at it in fact on the weekly. If I connect these lows here and this low here, you can see, remember, third touch of trend lines are usually a false breakdown or a false breakout. So that would make a lot of sense. And we've had a huge rally off this previous support level, wave, I think it's a wave 4. The weekly 200 moving average is also a very big deal. So if I was looking at an index that I wanted to buy for a bigger bounce, for me, this level and these moving averages and this combination of what we've done today makes the FTSE look perhaps the most interesting for a bigger bounce. So I'm just looking at a question. So far, we've just had one bounce off the low. We need to wait for the retest, and likely go sideways to a bit for make a bit of a base. Let these short-term moving averages catch up. So I'd be watching the FTSE. If we can hold this level on a bottom, then I think that we could see quite a nice bounce here. Meatfish said, do I have any thoughts on IG versus Oanda versus anyone else for traditional markets? You're fed up of IG charts not being on TradingView. Do you know, I mean, I like TradingView charts and alerts. For most markets, they're all the same. It is all the same chart, even if you're not using an IG one. I mean, I think, I can't remember what IG are. Are they MT4 charts? I quite like MT4 charts. No, I'm afraid I don't really have any thoughts on that. Sorry. Okay, I'm going to take a look at a couple more markets because in my group this morning we talked about how we hit quite important levels in gold and silver this morning. This is oil and wheat. Let's talk about them. So if we go to this is gold spot chart. I'm just going to take this away for a second, hide this or hide these. And I'm just, okay. So I've put fib retraces from this high to this low, and at every other level we had a really significant pullback. So this was from the 50%, the 38.2, this support level here was the 236 fib. Even at this 61.8, when we retested it, see this really nasty red candle. So we did have a bit of an issue, even though we overshot it. 61.8 fib levels are really messy levels. You tend to go beyond them and then come back, and they're not very sharp. Whereas 786 fib levels are normally pretty sharp. So I would say if we were to close the week back underneath 1989, we could see a bigger pullback here. I'm sorry about the dog barking. She's new and I can't stop it. We could see a bigger pullback here. So I'm watching that on the close, and I'm watching, we've gone sideways at this level. So far, to be honest, it looks a little bit just like a 3-wave correction, doesn't it? So if we were to break these highs, then the 886 fib level and then the previous highs would be next for gold. So that would be 2029. Remember, this is gold spot, not gold futures, and then 2075. So this does actually look pretty nice and corrective at the moment, doesn't it? So also big deal level for silver. Let's talk about why and tidy up a little bit. Here we go. Let's put this on the right so you can see it's just that big 50% retrace level. Those 50% retrace levels are always really sticky, and it kind of would look like a bit of a 3-wave corrective pattern in silver if we were to reverse here as well. So 25.78, big deal level. It was last week's high, and it also kind of looks a bit like a three-wave correction in silver as well. So that means we need to watch out that this doesn't turn into a bigger pullback. So far, this again, I agree, also looks like a very nice three-wave correction. So this little channel that we're in here, if this breaks to the upside, I think we're all good, and watch for the retest of the highs. New highs will carry on, and we'll put in the 61.8 next. Remember, it's like climbing a ladder, and we'll continue higher. In terms of our moving averages and stuff, for me, this in silver was quite exciting because I feel like this was a big three-wave corrective pattern as well. But we could also just say, well, it's a sideways range, isn't it? Here's the lows that we retested with a nice little double bottom, and here's the highs, and so I think if we get beyond that halfway point, it'd be quite exciting to look for a retest of the highs in the top of this range in silver, wouldn't it? So yeah, nice look here, but we've got to get above 25.78. Otherwise, yeah, this is still a downtrend and a corrective pattern. So Andrew, that's really nice of I'm going to start doing the weekly again. Thank you very much. That's very kind of you. Okay, so we need to watch out in silver. Now, this is, I just need to put copper back on, because usually if silver is going to have an issue, then so is. So this is what I was looking at. I was really quite excited by the new highs that we made in silver, but we seem to be stuck at these previous highs. And so I thought, well, if this is just a wedge, we should see a really nice breakout, another leg squeeze, another squeeze higher. It seems to me, though, that we have not. This today, let's go back to today's candles. Here, we tagged this previous high today, swing, although we had a pretty nice close on Friday, this is a pretty nasty reversal. So I'm going to say, we're probably still in this wedge, going sideways at those previous highs, and this is not quite yet the breakout that we're looking for. So all of these metals have hit a little bit of a wobble level, if you like, and liable to a pullback. And same thing in oil. Now, I'm not going to advocate shorting oil yet, but whenever you have a really wild move on a weekend, especially in Asian trading before US markets are open, I find it really scary, unreliable, and very often the high or the low for the week. And so it could be that this rally that we've had this big gap higher, and we're going to gap and yap or go sideways. Gap filled now. Does that mean we're going to go higher? Does this look like a three-wave correction? Potentially. I would say, though, after the size of the move, and I'd like to see, I'd really like to see this 4-hour reset. So for me, that usually means that this is just the first bounce in a correction. So we're going to see 3 waves before this bottoms. It might do that. It might do shallow and do this back to the bottom of this wave 4. As long as we stay above these 107, sort of 107 is a big deal. As long as we stay above 107, I'm still bullish, and I would be looking to buy the dip. And I think we've got further to come, unfortunately. So yeah, 107 is my support and resistance level. So that's how I'm seeing these traditional markets. I find the dollar index particularly distorted by the euro, because the euro is 57% of the dollar index. So if the dollar's having a good time, and if the euro is having a good time and nothing else is, the dollar index, won't really reflect that. The euro at the moment is having a really bad time. So I think it makes the dollar looks stronger than it is, which is why these other commodities have been doing so well. If we look at the euro against pretty much everything, it's done pretty well. But let's zoom out here again. I'll get rid of these moving averages for a second. I think that this is my monthly chart, big picture of the euro. I think this was wave 1, 2, and this was an overlapping wave 2. Here's 5 waves down for wave 3, and now we're in a wave 4 and potentially wedge or triangle. And if this is a triangle, which we very often see in wave 4, then this is the support level, and we're going to bounce from here from 120 to 110, because it's all feeling a little bit overdone. Now, what would cause that US dollar weakness? You think to yourself, well, maybe if the Fed don't hike rates. Now, why would the Fed not? Like, we've got this rampant inflation. Now, normally in the kind of Fed book of rules, they would, if the inflation was caused by energy prices, they would not hike. They do not hike in the face of energy prices. And whereas we've had inflation for some time that was nothing to do with energy prices, it's across the board, including wages, then, you know, they really should be looking to hike. But because we've now got this massive energy shock, I don't know what they're going to do. I really don't. Like, it's quite scary. I don't think the markets do either. And I think if they punt and they wait because of the war and everything that's going on, then, or they do very little, like, you know, 25 basis points, that we could see a rally here in the euro from this 120 to 110. And then I think we're going to end up parity. Here, parity is where we end up, and I think that we should back up the truck and buy everything we can then. I did survive the recent storms. Yes, I did. Thank you. So yeah, that's where we are with euro. So that means that right now here, I think that we are potentially on a level where we could bounce, which means potentially we are on a, potentially we could see a little bit of a pullback in the dollar rally, which would mean a good news for those commodities waiting to break higher maybe. But this is the level anyway that I'm looking at. It's actually 108.37. I think we could easily rally from here back to 120 area if it all aligns. Now, why do I think that? There's a really nice, I got very excited about this breakdown today in the euro pound. This is a weekly chart of the euro pound. And really our breakdown, you know, our support and resistance level comes all the way, it's all the way around 0.83. So we had this low here, retested it with a double bottom, and here we were underneath it again today, and I got quite excited about this. It's also a big 50% pivot level if you think about it, which if you reverse at an 886 fib, your target is always back to the 50%, which we got to. But if you break that 50% and continue lower, your target, second target is the 236, which is down here at 0.76. However, if we look at these lows, and this really is a sideways range, then, you know, it's looking like a little bit of a false breakdown at the moment, rally back. So I'm watching to see how this rallies back, because if it doesn't, and in fact we find resistance and roll lower again, selling the euro against the pound might be quite interesting. So we'll see. We're going to see what happens on this back test, if the euro turns lower or not. If you're looking for a trigger, like I honestly use really simple things, Heikin-Ashi candles and moving averages, that for me is a sell setup. And a Heikin-Ashi candle, which is here on TradingView, is really a moving average on a candle. It changes from red to green. So that's how I'm seeing FX at the moment. Across the board, like everything, the euro has had a massive, so European stocks and European currency being sold. So people pricing in, I think, damage, collateral damage from Ukraine. Okay, I'm going to look at Bitcoin now. If there's no questions about legacy markets, we'll look at Bitcoin. So big picture, I thought that this was a big picture. I thought we bounced from potentially a really important low. I'm just going to take away some of these lines at the moment. Take away this. And so I had two levels where I was expecting us to bounce in a wave 4 in Bitcoin. So just, again, I see this as a wave 1, 2, 3, 4, big irregular correction, and I'm still looking for one more wave higher in Bitcoin. And this pullback hasn't changed my view yet. Now, if we come all the way down here, I might change my view, but at the moment, yeah, we're holding important supports, and I still think that there's room to go higher. And I kind of think it's pretty cool how we're holding this 50% pivot level in the middle. That means for me that if we broke above 44,000 in Bitcoin, that we would be going up again, and the bottom from this correction would be in. So 44,000 is my bull line. I'm really bullish above that. And if we lose 36,000 or trade below 32,000 again, I think that we are headed to 28,000, which yeah, would be the bottom of this. If we drew this as a sideways range, that would be the bottom, wouldn't it? So let me take this away. And so we would make it really simple. And if we did go back there, we would likely say hi to that weekly 200 moving average where we got that. So this becomes just a sideways range. So right now, here we are in the middle, in a pretty tight range, in between 36 and 44. So it's not really a tight range. I was joking. It's a tight range for crypto, but it's actually, you can drive a bus through it, really. So what are we doing? Here's our little tight range. So in terms of weekly closes, okay? So really what we now need to look under the hood. So from this low off the bottom, the rally that I got really excited about, we really needed to see a kind of strong 5 waves up, and we didn't. It was 3 waves. And we've done 3 waves down again, and now we've done 3 waves up again. So I think that potentially we're still in a sideways correction, and potentially this is a wedge or a triangle pattern, which would point to a wave 4, which would point to, remember, one more swing lower. Let's tidy up this trend line and this one. So that would mean this is not the bottom that we're looking for. And we could see, when you make triangle or wedge patterns, they tend to break with the trend, and that would point to one more swing lower and a retest of this 28,900 or 29,000 level, which would be, disappointing and potentially, lower. We are under our daily moving averages going sideways. We've got a bearish cross of our weekly 20 and 50. We could do another swing lower, and if I've counted this wrong, if this is 5 waves up, we could be looking at a much bigger drop. At the moment I'm still thinking this is a wave 4, and we could do another leg higher. So a lot of uncertainty, but you can't chart for wars, unfortunately. So let's say that on a weekly close, 36,500 is really important, and really we don't really want to trade under this trend line if we can help it. Now, what if I'm wrong? What if this is in fact a channel like this, parallel channel? Then something like that. We're still on our way to it. So here's wave 1. This is wave 2. So this is just a shallow pullback. And we're still going to do another leg higher from here to that level, and then down again from there. or, you know, down to retest this level again, at least anyway, in a bear flag pattern, let's put it that way. That's a possibility. If we were to do that, then how would we know? Well, this is the most recent swing, isn't it, from last week? And we'll put our T36 fill on if we get above that, or if we get above those previous highs, that would be our bullish trigger. So above 39,420. So we've got two little bars here. We need to get above them, and then that would suggest that perhaps we're in another swing higher and on our way up still to 42,400. Big deal. Yeah, we can do FTM. Okay. So as long as we stay underneath 39,400, still headed lower, and this is a triangle, not a bear flag. Potentially. If we can do another leg up, that's where we go. So we could put retrace fibs on here. When you have ABC patterns, the most common retraces are 786. That would mean down to here, 36,688. That's where we would be looking to bounce from, underneath 36,888, which of course is also where our 36,000 level is. We're in a little bit of trouble. So that's where the support is for Bitcoin. So, not, unfortunately, the massive bullish reversal that we were hoping for from a couple of weeks ago. Let's take a look at Ethereum. Now, with the Russia thing that had, you know, in the Russia and Ukraine buying Bitcoin to get around sanctions, the altcoins haven't done as well. We've seen Bitcoin kind of do pretty well. In terms of our moving averages here on the weekly, though, this is pretty bearish for Ethereum. And, you know, we could call this a sideways range or not, but I think back to these previous lows, for me, would be the most likely retrace if I put my fibs all the way from here. You can see that we are also, like Bitcoin, perched on a big 50% level. And if we lose it, we're going to go down to 1910. So 24.75 is the level I'm watching on the close. In ETH, and I would also say this trend line. Now, first time you tag a trend line, very often the third touch is very often a false breakout, and it stays within the pattern. And then after that, if it goes again, then it's usually a real breakout. So you can see that exactly that here. One touch, two touch, false breakout. It's amazing how often people get sucked in by those. So that's really what we're looking at. This is important support for ETH. Again, if this is a triangle, though, we could do this. Now, I would probably not draw it as a triangle then, because I don't like it when it gets this tight or we trade all the way into the apex. If you're drawing a triangle, they generally break out somewhere beyond, you know, if we were to put fibs along the line, they generally break out sort of 2/3 along, and like beyond the 786, it's not going to happen. So what we might see is a pattern like this and ETH, and then, you know, but again, these sideways consolidation patterns in a downtrend, it is more likely that this pattern will break lower. If we were to see another leg higher, if this is just like Bitcoin, this is 1, 2, 3, and we are not done with this yet, then we'll go from here. So obviously, if we get back above 2995, or basically if we get back above 3000, then we're going to go to 3424 next in this pattern in ETH, and we'll have a big bear flag. There you are, that lines up. So there's our target above here. So there's the meet in the trade between here and here. So it's going to be all about whether we hold and reverse here or not. Then we have resistance and target. Okay. All right. So there were a couple of requests. So I've been looking at some of these altcoins have been holding up particularly well. I thought Ripple may be one of them, but we'll do them another week. A couple of weeks ago I did a video, the 10 that I like best at the start of the year that have made big ABC corrections. I definitely like all of those on retest as well. So still looking at them. Okay, let's go and look at some more. Yeah, let's looks. We're going to do it from scratch. Wait. So let's put a weekly chart on. I'll take my Heikin-Ashi candles off. Now, technically, this weekly 200 moving average should be really good support. And we kind of look like we know it's here, haven't we? Because for a couple of weeks, we've sat on it and gone sideways. The problem is that we haven't got the bullish reversal we'd really like to see yet. Let's see if it lines up with anything else. Look at that, 61.8. Now, that's a problem. Remember we said 61.8 levels can be messy, so you can go beyond them and then recover them. And so in this case, back above 13.32 would be bullish. And if we break this weekly 200 moving average, which at the moment is at 11.89, I think we will have another leg lower down to this 786 fib level. So in a very tight range, looking for a breakout in looks. We had a nasty drop, but we didn't close underneath our sideways range, did we? So that's what I'm looking for. And yeah, I don't know which way it's going to go. The trend is lower. So you kind of think, yeah, maybe it will break it. But that weekly 200 moving average potentially could be really, really good news. So let's see, it hasn't been round enough, long enough. So that would be the bullish trigger for me in looks. This does look like a three-wave correction. It's a little bit higher as well, so yeah. Okay, neutral, waiting for a breakout from that narrow range in looks then in Solana. Now, this is another one. I feel like we made a very nice 1, 2, 3, 4, 5 waves up. So we were looking for a 3-wave correction and then on our way up again. So if we do this here in Solana, again, we had a bit of a fight at this 61.8 level. Even if I go all the way from the lows, this is still a fight at the 61.8 level. And when we jumped back up and we back tested it, we got rejected here. A little bit higher, and the daily 50. I see us in a descending channel, and clearly if this support breaks here at 80.28, we're going to see another leg lower, and it won't be the nice, you know, 3-wave that I was looking for, unfortunately. So key support to watch for what it's going to do. I honestly don't know. Haven't quite. I'm taking my level from this first touch here. And we really have to just wait and see, I think. If we don't get a bullish reversal, if we get underneath it and it becomes resistance, clearly we are going to continue lower to 56. That's quite a long way when we're at 82, so I wouldn't hodl this if it doesn't do it. Now, what would a good bottoming pattern look like? Well, a double bottom, one of those swing failures where we drop down but we can't close the day underneath it and we bounce back up again. That would be a good look. A head and shoulders pattern, that would be a good look, wouldn't it? That's what you would be looking for in Solana if it's going to hold support here. So let's wait and see. Good level, just not the price action we need yet. And CRO, let's look at that one. Okay, I'm going to have to go back. Light Green said he wanted to see Solana against Bitcoin. So I'm just going to quickly do that because it's important to know, whether... So we had this sideways consolidation. So for me, the equal measured move in this big correction in Sol Bitcoin was down at 0.00201155. That's where this ABC correction would be an equal measured move. And so that's the next place that I'm looking for. And mainly that was because of the reaction that we got on the back just to the 61.8. And so we've been in this sideways range today, and it looks like we are breaking down from it. Now, we haven't closed back above these previous lows. So unless we do and we recover it and we keep going, I think we could be in a little bit of trouble. So here we are testing it again. If we were to, this looks now like a three-wave ABC correction. If we were to continue lower, if we were to break down here, that would be, I would say, here I would be a seller. I would give up on longs. And this would be my target, 0.002. If we get back, if this holds, and we get back above it, and we, and find support again from this level, that would be a bullish reversal and a false breakdown. So that's what I would be looking for in Sol Bitcoin. Okay, we are going to look at CRO, aren't we? And then FXX. So I'm going to go out to the weekly chart to start with, see where we are, because I'm just measuring these swings of this pullback. So this is another one, gosh, this 61.8. So I've measured this swing high to low, projected it from here, because this looks like a nice three-wave correction. And so we've been kind of holding this 61.8, haven't we? This is another one where I'm not sure what we're going to do here. We could break down, in which case we're headed to 0.187 and a new low. Or we could find support and try another swing higher here. And it could even turn into a really super strong one and a bottom. I'm not sure what it is at the moment. But if this trend line were to break, let's see if that helps us. I need to find one with more history, I think. Hold on. Let's look at bit tracks. There we go. I just want a bit more chart history. These levels are pretty messy. This bounce off the 786 though, it's pretty good. I think if we came back and tagged the weekly 50 here and double bottomed or something, that would be quite a good look, to be honest. But CRO at the moment has further to fall, unfortunately. 0.277, that chart says. Let's see. 0.33. Yeah. Not for me yet, not signs of a bottom, but if we hold the lows around 0.359 and make one of those, third touch, false breakdown, sharp reversals, that would be a good look for CRO. Okay, let's look at FXX, so I'll save that. Hold on. this is another one, you know, these corrective patterns. 1, 2, 3, 1, 2, 3, 1, 2, 3, and in a downtrend. So really, I think we should say we're really in a sideways range, and these are going to be important lows on the retest. If I think so, I'm going to go down to the 4 hour. I think that this is, you know, 3 waves done. If we're not going to make an ELO, then the 786 is the most likely support level for another, when you've made an ABC, so, or 3 wave correction. 18.53 then is potentially support. 18.53 against tether. Otherwise, look for a full retest of the lows in this one. Not sure if it's going to hold or not, but mostly in a sideways range like this, it kind of tends to. So let's do this. Yeah, that would be a good place to stop, wouldn't it? Between 18.5 and 18.9, okay? So a little bit lower for FSX against US dollar before I think it finds some support, unfortunately. I can do FTM, yes. Let's do FTM. How much history have we got here? Loads of history, good. So this looks like one of those ones making a big 3-wave correction, choppy overlapping correction. It's really good to see in FTM. So it's just a question of when will it finish, because this 61.8, I'm not going to chuck in the towel yet. These previous lows are clearly really good support. This weekly newly printed 50 moving average is pretty good support, and around the area of these previous lows is pretty good support. But I have to say, if we put on the equal measured move, the level that we're likely to go to is a little bit lower. 1.0615. Not quite there yet. Holding back above that 61.8 that we broke today might point to a better bounce, but if we look at it on the 4 hour, it looks like we got underneath and got rejected. So we're still holding these previous lows, but I think that the path of least resistance might be lower. This might just go consolidate and then lower. I'm just going to look at one more chart. Not the same history, is it? Okay. Hold on. Yeah, same pattern. So all of these moving averages unfortunately point to lower. Could we bounce here from these previous lows? Yeah, but still a little bit lower to fall on. 1.0459 then for FTM would be a really good level to look for a reversal. And then we would have a very nice 3-wave correction. I think the market may be looking at this. Now, if that's the case, if it makes a higher low and it does this, it's probably gonna end up, if we then get back about our target, so if we bounce here, your first target is going to be 1.936 and the 200-day moving average here, and above that we're going to go to the top of this trend line. But then it's probably going to be one of these, you know, triangle or wedges patterns. So whereas if we do the equal measured move, it's more likely to be this pattern, big 3-wave correction. So let's see. Let's Have I missed anything else? Tell. Okay, let's look at Tell. Altcoin. So many of these coins have done these really deep. I'm just going to put it in log scale so I can look at how it did it. Okay, I just want to see what's going on. So if this is wave 1, 2, yeah, that's a bit of a fantasy, isn't it? I'm going to take this swing for my fibs and see how everything lined up. I'm going to go with the big one then. So potentially we could put in a little 942, which is not much used. I'm going to say that I think that we are headed to where this swing is 61.8 of the first swing. That would be 0.001978, and I think that that's probably where we're headed back to. So I'm going to take it out of log scale and say that that's probably our level. What else is around here? Not much. Now, there is a bit of a support and resistance level. It might not go that far. These levels sometimes get front run, and if we were to look for the support and resistance, we've got this high, this low, and the retest of the previous low. So if you were to get a hold on a retest, get a double bottom, anything like that, in other words, if we make you know, a double bottom here, and then we break these highs and lows, which are top of the range here, then that would be a good look. That would look really good for a bottom, but unless we kind of do that, no, there is the risk that we continue down here to 0.001978. Okay, sorry about that. Let's look at it against everything's brutal. Everything really has been pretty brutal. Some of them, I quite like this atom. There's a whole bunch of them that look, see how we've made a 3-wave correction in this one, and we're in between our weekly moving averages. If we look at our daily moving averages, we're kind of going sideways. What I'd like to see an atom, and there's a few coins that look like this one as well. I'd like to see a hold here and a inverted head and shoulders pattern, and then I'd be looking for new highs. I think that yeah, this has a look of holding above the previous highs. This has a look of a, you know, nice sideways consolidation rather than a bearish reversal in atom. So there's a few like that. Hopefully, if everything can calm down, we'll look for some ones that are better set up and ready to rally next week. Let me just see, I made a note of some charts that I yeah, no. I think we really need Bitcoin to stabilize, and we need to see what happens on the retest of the lows. Rune, I got quite hopeful that Rune might have a breakout, and that hasn't happened last week. So you know, back to the drawing board in that one. So we just have to wait and see. Okay, thanks for coming. See everybody next week.